Somewhat unanticipated and a bit of a surprise announcement, we actually have changes to the general anti-avoidance rules. This is known as Part 4A. Part 4A will be amended, and by amended, expanded, so it can apply in two different situations. Firstly, for schemes that reduce tax paid in Australia, where the scheme involves accessing a lower withholding tax rate on income paid to foreign residents. This has been a bugbear of the ATO in recent times, and there's been several cases, one of which was Guardian, which people may know, and the other one is Minerva. And it's been in the context of Section 100A discussions as well. The ATO has a real issue with foreign residents getting income being diverted to foreign residents, and by diverting it to foreign residents, accessing lower rates of tax. And the second increase in scope is that it will also cover schemes that achieve Australian income tax benefit, even where the dominant purpose was to reduce foreign income tax. And this is a great, really clever argument. So for Part 4A to apply, the dominant purpose needs to be to get a tax benefit, and needs to be an Australian tax benefit. So some people must have been arguing, look, I didn't do this scheme for the dominant purpose of getting an Australian tax benefit. I did it for the dominant purpose of getting a foreign tax benefit, and that's not included. So somewhat ingenious, but that looks like that will be clamped down on. Really interestingly, for some reason, doesn't also cover Australian state-based taxes. So I think, at least in theory, someone could still argue my dominant purpose was to reduce transfer duty or payroll tax or land tax or something else, which is interesting that wouldn't be covered as well, but it doesn't seem to have been covered. And it will apply from 1 July 2024. Interestingly, it will apply regardless of whether the scheme was entered into on or after 1 July 2024. So for existing arrangements, they still will be covered by something like this if they extend beyond 1 July 2024.